Namaste, welcome to Arthaniti. In today's episode of Simplification of Mutual Funds, we will be concentrating on the very basics that as an investor you should know. Now, time and again, people have told me that they stay far off from mutual fund. Why? Because they don't know what a mutual fund is, how it works, and why get into things when you don't know about them. Well, one question that always comes up in my mind when I hear this argument from people. How do you invest in shares on the basis of hearsay and what your friends and relatives are telling you when you don't even know what the company does in most of the cases, right? When you have not done any studies about the fundamentals and the financials of the company, and you end up investing in the company just because someone else is doing it, right? Blind faith, I must say, but that doesn't work in mutual funds. It should not work in any investments. Okay, coming back to our topic today, we will be discussing the very basic bifurcation of mutual funds, that is close-ended funds and open-ended funds. In this video, I will tell you what a close-ended and an open-ended fund is, how should you know, and what is the basic difference between these two types of funds. So let's start. Okay, now let us try to simplify what a open-ended and a close-ended mutual fund is. First, let us concentrate on what is an open-ended fund. Now, normally, most of the mutual funds that we invest in are open-ended funds. What do you mean by an open-ended fund? Open-ended fund. Now, as the name suggests, the fund which is open. It is not closed after the fund offer is over, right? Normally, say suppose the currently SBI Multi-Cap Fund NFO is going on. Okay, the last date to apply for that new fund offer is 8th of March. Say suppose you apply for that particular fund. After the NFO closes on the 8th of March, there is a prescribed period of say normally 30 days. So after that prescribed period is over, you can buy and sell that mutual fund anytime you want directly from the fund house. Do you understand? So I am SBI. I have come up with a new offer, SBI Multi-Cap Fund till 8th of March. You are an investor. You have applied to me in that NFO. After the period of 1 month, normally 30 days, from the end of the NFO date, that is 8th of March. So 1 month after that, 8th of April. So after 8th of April, you as an investor can buy and sell those units which you get in the NFO directly to me, SBI. Understood? Plain and simple. You don't have to go to a broker. You don't have to go to any stock markets to sell your investments. You have to come directly to the mutual fund house. Right? Simple. Alternatively, what is a close-ended fund? Which is not an open-ended fund. So, close-ended funds are closed for subscription after the period of NFO is over. So, cannot don't the investors have any option of exiting the mutual funds once they invest in a close-ended mutual funds? Well, they have a route. What is the route? They have to approach a broker or trade in the stock market. Close-ended funds cannot be traded through fund houses. For trading in close-ended funds, you have to go through the stock market through a broker. Do you understand? Simple. Open-ended funds, you can buy and sell through the fund house. Close-ended funds, you cannot buy and sell through the fund house. You need to approach a broker and sell or purchase it through the stock markets. Plain and simple. Now, say suppose you want to sell your open-ended mutual fund. You will have to sell it at the NAV price, net asset value price. How is this price fixed? This price is normally fixed on the basis of the day end prices of the underlying securities in which the fund has invested. Do you understand? Underlying securities in the sense the investments that the fund has done with your money, the value of those securities at the end of the trading day helps to determine the NAV of an open-ended mutual fund. So transactions in that fund happen on the basis of this net asset value. In case of close-ended funds, NAV is calculated But since these funds are traded on a stock exchange, the value of these funds can be a little higher or can be a little lower than the NAV price. Why so? Because the prices are determined by the demand and supply of units of that particular fund. Like share prices are determined by the demand and supply of the shares of a particular company. The price of a unit of a close-ended fund is also determined similar to shares by the purchase and sale, demand and supply of units of that fund. Correct? So, if you want to sell and purchase an open-ended fund, NAV is the price you will have to pay. In case of close-ended funds, even though NAV prices are calculated, you might have to pay more or at a discounted rate than the NAV price, depend on how the fund is traded on the stock market. So then which is more preferable, an open-ended mutual fund or a close-ended mutual fund? Well, telling you frankly, the returns that you expect from a mutual fund does not depend on whether it is an open-ended or a close-ended mutual fund. It basically depends on the kind of mutual fund that you are investing, the management style of the mutual fund, who is managing the fund, how are they managing it, how effectively are they managing it. These are the factors which will help determine the kind of returns that you get on your mutual fund. One advantage that open-ended mutual fund investors have over close-ended mutual fund investors is the flexibility, is the high liquidity that no other investment product gives you, barring the fixed investment products in banks. The liquidity wherein you can go and redeem your mutual funds any day from the mutual fund house is what is more advantageous in an open-ended mutual fund than a closed-ended mutual fund. So people who are new to the market, who are relatively new to investing, who do not know the way the stock market functions, who have not been through the cycles of the stock market, open-ended mutual funds is a way for you to start investing in a relatively risky environment with a less risky product with professional and expert management. So I hope this video has helped you declassify or decluster what a open-ended and a closed-ended mutual fund is. Every day I will be telling you some concepts about mutual fund which will help you understand mutual funds better and will help you take advantage of this product which not many people in our country are taking. Right? I hope you like this video. Please share and subscribe to my channel if you have not done so. And happy investing.